Imagine waking up to the blaring headlines. Bitcoin has shattered the mythical $200,000 barrier, sending shockwaves across every corner of the financial world. Overnight, the world's largest cryptocurrency is not just making history, it's rewriting it. But is this astonishing price surge a fleeting fantasy? Or are we truly standing on the brink of the most explosive crypto rally ever recorded? Today, we embark on an in-depth journey into the heart of Bitcoin's ascent, unpacking the powerful forces driving its meteoric rise, the intricate risks threatening to unravel it, and what this all means for investors, economies, and the future of money itself. To truly grasp where Bitcoin could be heading, we must first revisit its extraordinary journey, a tale as volatile as it is captivating. Bitcoin's story is not merely a chronicle of internet hype or speculative bubbles. Instead, it is a phenomenon forged by the interplay of macroeconomic cycles, revolutionary technology, shifting investor psychology, and relentless innovation. Over the past 12 months, Bitcoin's price has soared from approximately $65,000 to well above $120,000. This breathtaking ascent has ignited euphoria among some and intense anxiety among others, as the world grapples with the implications of such a drastic shift in wealth and power. The question everyone is asking: what is fueling this unprecedented surge? To answer that, we must explore a framework that has guided traders for nearly a century: the Elliott Wave Theory. Developed by Ralph Nelson Elliott during the 1930s, this theory suggests that markets do not move in random chaos, but in structured, predictable patterns called waves. Each wave reflects the collective psychology of investors, alternating between optimism and fear, greed and caution. In essence, Elliott Wave Theory offers a roadmap for navigating the complex cycles of human emotion that drive markets to dizzying heights and sometimes to devastating lows. For Bitcoin, analysts have mapped out what appears to be a textbook five-wave surge. The first wave began with a robust move upward from the $65,000 consolidation zone, pushing Bitcoin to new highs. The second wave brought a healthy correction, a moment of doubt and recalibration, before the third wave, historically the most powerful, launched Bitcoin into the coveted six-figure range. With the fourth wave acting as a brief pause and consolidation, all eyes are now on the fifth wave, the climactic phase that, according to pattern recognition and historical precedent, could propel Bitcoin to $200,000 or beyond. But why does Elliott Wave Theory resonate so strongly with Bitcoin's current trajectory? The answer lies in how these waves mirror mass psychology. Each impulsive move upward is fueled by a blend of optimism, fear of missing out, and technological breakthroughs, while each correction is a reflection of uncertainty and profit-taking. This cycle repeats itself across different timeframes, creating fractal patterns that attract both veteran traders and algorithmic models. According to Matt Hogan, Chief Investment Officer at Bitwise, Bitcoin's scarcity and resilience position it uniquely to benefit from both fiscal instability and improving market sentiment. Yet, technical analysis is only one piece of the puzzle. A major catalyst behind this year's rally is the highly anticipated Bitcoin halving event of 2024. For those new to the crypto world, a halving is a pre-programmed event that slashes the reward miners receive for validating transactions, effectively cutting the rate at which new Bitcoin enters circulation. In April 2024, the reward dropped from 6.25 Bitcoin per block to 3.125. This event, occurring approximately every 4 years, serves as a shock to the system, compressing supply and amplifying scarcity. Historically, every halving has been followed by a dramatic price run-up, as reduced new supply meets growing demand. As of May 2025, Bitcoin's dominance has surged to an astonishing 72.4% of the total cryptocurrency market, excluding stablecoins. This is its highest share since the early months of 2017, signaling a renewed focus on Bitcoin as the flagship asset in the digital economy. Legendary investors and major funds are taking notice. Bitwise analysts now estimate Bitcoin's fair value at $230,000 by late 2025, factoring in the twin engines of institutional adoption and finite supply. Even more bullish, Skybridge Capital and Unchained are forecasting targets between $200,000 and $250,000, citing the tidal wave of institutional capital pouring into spot Bitcoin exchange-traded funds and other instruments. But the optimism does not stop there. A so-called power law model, celebrated for its uncanny accuracy in previous cycles, suggests that Bitcoin could reach the $200,000 milestone by year's end, mirroring the explosive blow-off tops seen in 2017 and 2021. Analyst Gert van Lagen has taken an even bolder stance, predicting a peak at $325,000 by the 5th of July 2025, based on a synthesis of Elliott Wave analysis and historical cycle patterns. As he puts it, Bitcoin could reach $325,000 by July 5, 2025. But if momentum stalls, a brutal correction could wipe out recent gains in a flash. What is driving this feverish institutional interest? One pivotal factor is the emergence of regulated investment vehicles, particularly spot Bitcoin exchange-traded funds. In early 2024, the United States Securities and Exchange Commission approved several of these ETFs, unlocking a floodgate of capital from pension funds, endowments, and family offices previously sidelined by regulatory uncertainty. According to data from Fidelity Digital Assets, ETF inflows alone have accounted for billions of dollars in net buying pressure since their launch, accelerating the transition of Bitcoin from fringe speculation to mainstream asset class. Meanwhile, the macroeconomic backdrop has created fertile ground for Bitcoin's narrative as digital gold. With global debt levels spiraling, central banks resorting to aggressive monetary easing, and traditional fiat currencies coming under increasing pressure, investors are seeking refuge in hard assets. The United States Congressional Budget Office projects that federal net interest payments will triple to $3 trillion annually by 2030. An eye-watering figure that underscores the fragility of the current financial order. In this environment, Bitcoin's fixed supply and decentralized architecture stand out as antidotes to inflation and currency debasement. But as Bitcoin's star rises, so too does the intensity of the challenges it faces. The journey to all-time highs is strewn with pitfalls, each capable of derailing the rally. For one, Elliott Wave Theory itself warns that euphoric fifth waves are often followed by sharp corrections, a so-called ABC retracement. Such corrective phases are psychological minefields, shaking out speculative excess and punishing latecomers. Technical indicators are flashing warning signs. The Relative Strength Index, a measure of overbought or oversold conditions, has reached levels last seen at major market tops. Mining profitability, as measured by hash price, has plummeted from 12 cents to just under 5 cents per terahash since the halving, putting immense pressure on miners, especially those operating with older, less efficient equipment. Regulatory risks loom large as well. Authorities in the United States, European Union, and across Asia are sharpening their scrutiny of crypto markets. There is mounting talk of new reporting requirements, harsher tax regimes, and even outright bans on certain crypto activities. The collapse of several high-profile exchanges and lending platforms in recent years has only intensified calls for tighter controls. History reminds us that governments rarely surrender oversight of monetary systems without a fight. In the 1930s, for example, the United States government famously outlawed private ownership of gold, forcing citizens to exchange their bullion for paper currency. While such draconian measures are unlikely in today's digital age, the precedent underscores how quickly regulatory winds can shift. At the same time, the crypto ecosystem is evolving at breakneck speed. Bitcoin's network capacity, measured in transactions per second, remains a point of contention. While the Lightning Network and other scaling solutions offer hope, critics argue that Bitcoin must continue to innovate or risk being outpaced by rival blockchains boasting faster, cheaper, and more flexible architectures. In this digital arms race, adaptability is survival. As Joe Burnett from Unchained emphasizes, Bitcoin's monetary properties are already magnitudes better than gold, but innovation never sleeps. Whether breakthroughs benefit Bitcoin or its rivals may decide the next chapter. Let's take a step back and consider the possible futures that lie ahead for Bitcoin and its investors. Scenario 1. Bitcoin fully embraces its role as a macroeconomic hedge. Imagine a world where geopolitical tensions escalate, trade wars flare, and traditional asset classes falter. In this scenario, Bitcoin emerges as the ultimate safe haven, a digital fortress against inflation, capital controls, and currency devaluation. Institutional adoption accelerates, pushing prices well beyond $250,000. Yet, this also invites heightened regulatory scrutiny, as governments seek to clamp down on capital flight and illicit use. The tension between freedom and oversight becomes the defining battle of the era. Scenario 2 is far more sobering. Regulatory crackdowns gather pace, particularly in major economies like the United States, China, and the European Union. Lawmakers introduced sweeping measures, from stricter know-your-customer rules to prohibitive taxes, and even partial bans on cryptocurrency trading. Faced with mounting legal uncertainty, institutional giants retreat to the safety of regulated asset classes. Retail investors, left exposed, endure a painful market corrections. This is the classic post-fifth wave scenario. After every euphoric rally, a sobering corrective phase tests the nerves of even the most seasoned participants. Elliott Wave Theory warns us, no rally lasts forever. A third path is defined by technology itself. Breakthroughs in blockchain scalability, privacy, and interoperability could usher in a new era of competition and innovation. If Bitcoin's core developers can successfully implement upgrades that boost transaction speed and reduce fees, it may cement its dominance for years to come. However, should another cryptocurrency solve these challenges faster, the balance of power could shift. Ethereum, Solana, and even yet undiscovered contenders all vie for a slice of the future financial order. For investors, this underscores the importance of staying informed and adaptable. So amid this whirlwind of possibilities, what practical steps can viewers take to navigate the high-stakes world of Bitcoin investment? First and foremost, stay curious. The Bitcoin story is not just about numbers on a screen. It is a living, breathing experiment in economic design and digital sovereignty. If you are considering investing, approach with both ambition and caution. Every potential reward carries a corresponding risk. Even the most sophisticated forecasts can be overturned by unforeseen world events, regulatory pivots, or technological disruptions. Use a multidisciplinary lens. Combine technical analysis like Elliott waves and Fibonacci retracements with macroeconomic trends and regulatory news. No single indicator tells the full story. Diversification is your strongest ally. Allocate only what you can afford to lose, and balance your exposure across different asset classes, including traditional stocks, bonds, and real estate. This is especially crucial, given the high volatility inherent in cryptocurrency markets. Set clear goals and risk limits. Do not be swayed by hype or fear. Develop a strategy that reflects your personal financial situation, investment horizon, and tolerance for uncertainty. If you are involved in mining, pay close attention to profitability metrics. The 2024 halving already compressed miner revenues, and the next halving, projected for late March 2028, will intensify the scarcity game even further. As hash price declines, only the most efficient operations are likely to survive. If you are considering entering the mining space, factor in equipment costs, electricity prices, and regulatory obligations. Pay attention to evolving regulations. Monitor statements from the Securities and Exchange Commission, Commodity Futures Trading Commission, and international bodies like the Financial Action Task Force. Sudden policy changes can trigger violent market swings. Remember the lessons of the past. In 2017, rumors of regulatory crackdowns in Asia led to multi-billion-dollar sell-offs within hours. Stay nimble and be prepared to adjust your strategy as the landscape evolves. Let's also explore some historical parallels that offer insight into Bitcoin's current moment. During the late 1970s, gold underwent a similar transformation from a niche investment to a mainstream safe haven, as inflation eroded confidence in fiat currencies. In just a few years, gold's price multiplied several times over, before eventually succumbing to a brutal correction. The same cycle of exuberance and retrenchment has played out countless times across financial history, from the dot-com boom of the late 1990s to the housing bubble of the early 2000s. The lesson: markets are driven by waves of emotion as much as by fundamentals. Expert opinions remain sharply divided. Marcus Thielen, head of research at Matrixport, believes Bitcoin could reach $125,000 by year-end, contingent on further regulatory approvals and growing institutional interest. Arthur Hayes, co-founder of BitMEX, points to the actions of central banks, particularly the Bank of Japan, as potential catalysts for massive Bitcoin rallies. Stock Money Lizards, another prominent analyst group, highlights the Optimized Trend Tracker, a technical tool that recently flashed a bullish signal, indicating that Bitcoin may be ready for its next major leg upward. Let's not overlook the important role of network effects. The more users, developers, and businesses that build on top of Bitcoin, the stronger its moat becomes. This is known as the Lindy effect. The longer something has survived, the longer it is likely to continue surviving. With over 15 years of uninterrupted operation, Bitcoin's resilience is a testament to its robust design and passionate community. Yet, as adoption grows, so too do the challenges of governance, scalability, and security. For those interested in the broader implications, Bitcoin's rise is more than just a financial story. It is a revolution in how we think about money, trust, and sovereignty. In countries suffering from hyperinflation or currency controls, Bitcoin has provided a lifeline for preserving wealth. In Nigeria, for instance, grassroots adoption has surged as citizens seek alternatives to a volatile local currency. In Argentina and Venezuela, Bitcoin is increasingly used for remittances and day-to-day transactions, bypassing dysfunctional banking systems. Yet, Bitcoin is not without its detractors. Critics argue that its energy consumption is unsustainable, its transaction fees are too high, and its volatility makes it unsuitable as a store of value. Advocates counter that ongoing improvements, such as the migration to renewable energy sources and the adoption of second-layer solutions, are already addressing these concerns. The truth likely lies somewhere in between. In summary, the fate of Bitcoin hangs in a delicate balance. The evidence points to a strong case for continued growth, driven by scarcity, institutional adoption, and a shifting macroeconomic landscape. At the same time, technical signals and historical patterns urge caution. The Relative Strength Index warns of overbought conditions. Miner stress is palpable. Regulatory risks are growing. The outcome is far from predetermined. The only certainty is volatility. Periods of exhilarating rallies interspersed with gut-wrenching drops. And here is a secret that many miss. The true power of Bitcoin is not in its price charts, but in its capacity to force the world to rethink the very nature of money, value, and control. Whether you are here for profit, principle, or simple curiosity, you are witnessing an economic revolution unfold in real time. Bitcoin is not just a coin, it is a crucible for the ideas that will shape the next century. Thank you for watching. If you found this analysis useful, please like, subscribe, and share your thoughts in the comments below. What do you believe? Is Bitcoin heading for unprecedented highs? Or are we on the verge of a historic correction? Stay tuned for our next deep dive into global economics and technology.